Yeah, yeah. Check, check. Hey, hey, yeah, yeah. Check, check. 1, 2, 2. Hey, hey, yeah, yeah. Check, check. 1, 2. All good. Hey, hey, yeah, yeah. Check, check. Happy?
All set. Thank you, Emma. Thank you both.
Harry, have we got you all
You're very kind.
good to go? Okie dokie. All right, thank you very much, everyone. Good afternoon, welcome. I'm Joe Shalam, Policy Director at the Centre for Social Justice. This is the first of our events at Labour Party Conference, so a very warm welcome to you all. Please do grab a brochure, look at our other events. We've got one immediately on after this, all about Britain's Lost Boys, that we'd love to see you at as well as plenty of other events. But I wanted to start today's event with a little test of our audience's honesty. Okay, so I'd like you to raise your hand, because let's be honest, financial inclusion, it's a bit of a wonky phrase. Raise your hand if you can say with 100% earnestness, you know what financial inclusion is. Okay, go on, come on. I won't pick on you. Okay, interesting. Well, credit to you for coming to this event, I've got to say. A huge hand to you for coming to this. And I think we always try and bring this to life a little bit at the CSJ, and we do that through the frontline organisations, the charities that we work with. And financial inclusion really, and its sort of ugly sister, financial exclusion, is about, it's the mum at the school gates who is terrified of bumping into the illegal lender who's lent her some money, maybe posed as a friend. It's about the family sat around the table trying to make ends meet and thinking, why am I being charged more for basic goods and services than plenty of other people I know? But it's also actually about the economic growth that is squandered when people aren't able to participate in kind of mainstream financial products that many others of us are. So that gets right to the core of why we're having this discussion today. It's about individuals, but it's also about the economy at large. And we've got a fantastic panel here with us to discuss that. So I'll introduce them now. We, of course, have Lucy Rigby, Economic Secretary to the Treasury, already having a profoundly impactful sort of impact in her role, having only taken it on recently, and we're very, very grateful to her for being with us. Kate Pender as well, of Fair for All Finance, an outstanding organisation, really tackling the lack of affordable credit options for people on the front line of this issue. Luke Charters, to my right, the MP for York Outer, PPS at the Business Department. Been a real champion, actually, on these issues, and also around a really important issue that's close to the CSJ's heart around bailiff regulation. Thank you very much for being here. And Muna Yassin as well, CEO of Rooted Finance. Again, one of those organisations that is out there doing incredible things on the very front line of this. So we've got a great suite of panellists, some really interesting perspectives to come through. But to kick us off, I would love to invite up Rachel from WPI Economics, who's going to give us the numbers and talk about why this matters to the economy as well. So Rachel, over to you.
Great, thanks Joe. Good evening everyone. So as Joe said, I'm Rachel Gregory, I'm Head of Policy Consulting at WPI Economics. So really grateful for CSJ inviting us here to give a bit of an intro to this session, and for Fair for All Finance, who we worked with on this research. I do have slides because this is a very high-tech fringe, but they are over there, so they may not show what I can't see them so well. So we'll see if they match up with what I'm saying, but you might find it interesting to look that way as well. So Fair for All and many others have done so much work over many, many years, setting out how much of a problem financial exclusion is and what that means for individuals and what it means for their financial well-being, security and resilience. And that this is still a real problem today. We still have 5% of the UK population who are unbanked, but more than that, 8.1 million people in problem debt. 60% of renters don't have contents insurance, sort of basic financial products that support everyone to live securely and help us through those tough times. So we know it's a barrier to individuals' financial well-being, but what is less spoken about is what that means on the macro scale. What's the big picture? What's the cost to our society and our economy? So that's what our research set out to look at. And at this really timely moment when we have the government on its growth mission and also at the same time developing a national financial inclusion strategy. And so what we wanted the research to show were that these two things are not in competition, but actually improving financial inclusion can be a core and in fact a really critical part of achieving the growth mission and inclusive and sustainable growth. So how can we understand that financial inclusion leads to economic growth? I think there's lots, sorry, I'm still on the previous, yeah. There's a whole host of academic research. It's really well understood and evidence that in developing economies, extending access to financial products and services is a really key part of the growth trajectory. But it doesn't stop there. There's actually some academic research that shows improving access to bank accounts can actually have a higher rate on increasing economic growth in high-income countries. And so we're interested in digging into that a bit more, because as we know, financial inclusion is not just about bank accounts. It's about a whole host of things, which is shown on the left-hand side of that diagram. It's about having products and services that are accessible to you at a fair price, that you're confident and you've got the skills to use and fit your needs. And so there's a number of ways that a financially inclusive society can trickle through to growth. One is that by expanding access to financial services, you're expanding the customer base in the financial services market. So there's a direct impact potentially through the increased output of that as a sector. But really more significantly is the role that financial services play in underpinning what we often call the real economy. You know, everything else in every other sector is underpinned by financial services. And from that, there is both a direct and an indirect way that financial inclusion can contribute to growth. Direct in terms of what access to financial services allows people to do. So the purchases they can make, the savings that they put away, how that can trickle through to investments. But also because we know that financial difficulty has such a big impact on people's well-being, mental and physical health, relationships. And so actually by improving financial inclusion and improving people's health, resilience, and also consumer confidence, we see this really strong indirect route to economic growth. And all of that is mapping through to ultimately four key things that can have an impact on growth: higher employment, higher productivity, higher investment, and higher consumption. So in our research, we looked at 3 specific case studies as a snapshot of some of the specific ways that financial inclusion can lead to growth. So we looked firstly at savings. So we looked specifically at an opt-out workplace savings schemes modelled on some of the great work that's been done in improving auto-enrolment in pension savings. Because currently 8.7 million people in the UK have less than £100 in savings. So really at risk of short-term financial shocks. And also savings are really important to help us plan and prepare for the future, as we know. So we were able to model that a workplace savings scheme could help 10.3 million people participating in the scheme build up in 1 year alone a total of £2.7 billion of savings. And based on evidence that shows the link between building up short-term savings, turning into long-term savings and investable assets, our modelling showed that that could generate a £110 million boost in over 5 years in GDP for the economy just from those 1 year worth of savings. Second, we looked at affordable car insurance, which is a really significant problem for 2.6 million people, say they're priced out of the car insurance market. And 1 in 4 of them, as a result, find it harder to find employment and access job opportunities. And the poverty premium costs, on average, an extra £300 a year people pay on car insurance. So we modelled a policy that would remove the poverty premium for people living in deprived areas based on postcode pricing. And we were able to show that that could lead to more workers for the UK economy, which would in total increase GDP in a single year by £370 million. And then finally, we looked at a broad range of policies that might lead to greater financial well-being, from greater access to affordable credit, greater savings and less problem debt. with an eye on how this might help us solve the UK's productivity problem. There's research that shows that every year, on average, 4.7 days per year are lost per worker because of financial worries and the pressure that that puts on people's mental well-being, which in total is 60 million days per year. So we looked at what it would mean if working-age adults were able to have better financial well-being as a result of financially inclusive policies, and how that could reduce days off work, so absenteeism, but also lower productivity while they're in work. And ultimately, those that have found themselves having to leave the labour market as a result of financial concerns and the impact that's had on them, enabling them to get back into employment. And we found that the impact could be really, really substantial, totalling £3 billion just from reducing presenteeism, 1 billion from absenteeism, and 2 billion from increasing employment. So taken together, that could be a really significant boost for the UK economy, totalling £6.4 billion in a single year, which over the remainder of this Parliament would be in excess of £25 billion. So that shows you the scale of opportunity here, because that's just from 3 specific case studies. And as we know, there are 20 million people currently underserved by the financial services market in the UK, so the scale of that opportunity is really significant. And why does that matter? You know, ultimately, it's about the people that will benefit in their own lives from being financially included and all the benefits that's going to bring them. But there's also really significant political and economic opportunities here. You know, our work has mainly looked at the sort of medium-term effects and focusing on the routes to growth. There's also significant savings on offer here for public finances in reducing some of the social costs we know come with debt and poor financial health, as well as intergenerational impacts from reducing the impacts of growing up in poverty and what that can mean for children's life chances. But also, I think interestingly to point out, a potential short-term boost from what it means when someone feels better off, even if their situation has not changed radically, but a little bit of savings has been shown to give so much more peace of mind, and so a potential boost to consumer confidence there. So that's all to say that financial inclusion is definitely pro-growth, and as our research demonstrates, financial inclusion can be a real key enabler of growth. So extending the benefits of access to financial services to more people allows them to be more productive, more resilient, and able to contribute more fully in the economy. But to realise those benefits, we are going to need to be really ambitious in our efforts to reach as many of those 20 million financially underserved people as possible, which is, I'm sure, what the panel is going to get into.
Fantastic. Can we have a round of applause? Thank you so much, Rachel, for that. And really striking the numbers there, both on the growth impacts, but also that really important, like, feeling the benefit and the impact of that when we know how important it is for voters and people out there to feel the change. We're going to come to our panel for their initial reactions now, and then we'll open it up for a little bit of Q&A. So, Luke, if I'm able to start with you to give your takeaways from that.
Well, thank you. Thank you for hosting this. And I just wanted first to say it's a real privilege to work alongside colleagues like Lucy on the Labour benches. I think between Lucy and I, we cover some of the regulatory alphabet soup, OFT and CMA, is that right? And yeah. I was FCA and Bank of England. So I think we've got a good insight, but I think we've got a good insight into this because we're Labour politicians and the constituents we meet. And I want to just focus in on problem debt and saving, just given the time I have. Is that okay? I'll start with a stat that the University of Bristol have just published some research this week on financial resilience, which shows that if you're a saver and you amass just £2,000 worth of savings, that even for years down the line, you are at 60-70% plus less likelihood to get into problem debt scenarios and all of the mental health challenges, by the way, that comes with that and create a crisis. And look, from that, I really just want to touch on 2 stories, given the time I've got. Look, of all the regulation I've done, there's one area which is really close to my heart and linked to our Labour values, and that is regulation of the enforcement sector. I met an individual called Michael, and he was involved in a motorbike accident. He effectively lost part of a limb. He was in hospital. And when he was discharged, he lost his job. He fell behind on his council tax. He fell behind on his utility bills. He had no savings, okay? And when a bailiff buzzed the flat bell, you know, a shiver went up his spine because he was concerned genuinely that they'd come in and take his daughter's toys and cot. And I met another individual along with step change. Another individual, he was disabled, a bailiff, a rogue operator, knocked on his door, foot in the door. He can't do that, by the way, threatened to seize his disability equipment. Okay? We're going to put a stop to that as a Labour government. That's the first message, a first victory for financial inclusion I want to put on the table tonight, because Sarah Sackman, who's one of the other brilliant ministers working alongside Lucy, has committed to regulating the enforcement sector. And some of the most pernicious and horrific and heinous activities when it comes to enforcement, we're going to put a stop to. But look, there's real positive steps that we're doing as well. And even just in, is it 3 weeks now, Lucy?
This is my third, yeah.
Third week. You know, one of the things I think you've already committed to is help to save, and to use what is in effect psychological nudge theory so that people can build that nest egg. And in fact, all of the mental resilience and financial resilience that comes with it, you know, those are our values. It's an incredibly important thing. And I'll just end by saying as well, if Joe's not pressing my foot for time, the other thing we're doing as well, which we're hugely passionate, is around financial education as well, and having a role for that in the national curriculum. And I'm a massive believer that starts in primary schools, just as my little boy this week, by the way, has been painting his money box at age 3, and I've been giving him coins to put in his money box, just as my wife, who teaches year 2, has been teaching children about the shape of 20p coins. So financial education is hugely important when it comes to inculcating that culture of saving as well, and I think it's that I think we can make a real legacy to when it comes to problem debt. So I'll leave it there. Thank you, Joe.
Thank you very much, Luke. Kate, can I come to you now next, please?
Thanks so much, Joe. And to Luke for your opening remarks there, and to Rachel for the insight to the report. I wanted to just start by really emphasising quite how significant the opportunity through the National Financial Inclusion Strategy is. It is genuinely a once-in-a-generation opportunity to change things. And if I think about what are the other moments in time that we could look at as comparators, one would be the work of the Financial Inclusion Task Force. And the outcome of that was getting 8.8 million people a mainstream bank account for the first time. And that's the scale of change in the millions of people that I think this strategy really needs to deliver. We can't have something that is incremental and that helps, say, 10,000 people. We need really big scale change, and for that we need an ambitious strategy, and it's amazing that we've got a Labour government committed to pulling that strategy together. I think if you kind of step right back out of the specifics of each example of the numbers that are wrong, you're left with this really big picture of 20 million people in financially vulnerable circumstances. And that sounds like a big number, and it is, and unfortunately it's gotten bigger. So when Fair for All Finance first did this research, it was 17.5 million people. And the difference that you're looking at between 17.5 million and 20 is what the cost of living crisis has done. And it has done that to families that previously hadn't been in trouble. And if you look at our public discourse at the moment and the level of angst in communities, the level of uncertainty, the extent to which people are feeling their lives to be precarious, to Rachel's earlier points about mental health, you don't have to look very far to understand how that deterioration is being expressed around the dinner table and in conversations with families that are really struggling. It's also sadly the case that those communities that are more likely to be feeling this pain are those who are disabled, women, ethnic communities, and many of the towns that genuinely feel left behind. So this lack of fair and affordable financial products is, to Rachel's earlier presentation, it's not just a moral issue. It's not just about fairness, which I think we all care about, but it's also about achieving growth. We can't possibly leave the prospect of £25 billion worth of growth on the table. You know, we need the strategy to realise these opportunities. And we need it because it will make the difference to our economy, but it will also make the difference to lives of people who are really struggling. Just to share a couple of stories with you, we have a case study about a young single mum called Olivia. And Olivia wanted to go back to work. She had a job offer, and she couldn't accept the job because she couldn't pay for the nursery fees up front. And it was her local credit union who gave her a really small loan for what, you know, many of us in this room would consider this loan of less than £1,000 a small outlay, but for her it was huge. If they hadn't given her that loan, she couldn't have taken that job. She couldn't have got the rest of her future underway. So these are the differences that financial services can make when they're done really well. When I think about the case studies that we have from Liverpool, I think about Enterprise Credit Union and a customer of theirs called Julie. Julie took out a loan with Enterprise for £300. She just needed a holiday for her and her young son. That relationship that she had with the credit union continued over many, many years. She took out multiple loans with them. She paid all of them back cumulatively, borrowing from them roughly £16,000. She also built up a savings pattern because of the credit union model, which is to save while you borrow. And that meant that she's ended up with more than £2,000 as a savings buffer. She also went back to school, enrolled in university education here in Liverpool, graduated, and that whole story is one of someone's financial circumstances really changing their opportunities in life. So I think the fundamental thing for me is that inclusive growth really absolutely relies on inclusive finance. And we can't have this perpetuation of the problems that exist in our society at the moment with millions of people excluded. So there's a lot of pressure on making sure that we seize this moment in time and have a national strategy that delivers the scale of change that's needed. And I am really looking forward to that strategy from this Labour government, delivering the legacy that we all know is desperately needed. This isn't about small tweaks. It's about wholesale, significant and sustained change. Thank you.
Thank you very much indeed, Kate, for that. Muna, am I okay to come to you next, please, for your takeaways?
Yes, thank you. It won't be a surprise to know that I agree with everything that Kate has just said. Rooted Finance, just to give you a bit of context, is a community-embedded specialist debt advice organisation. We've been delivering advice for over 24 years in London, and during that time we have seen the banking crash, we have seen austerity, we have seen the pandemic, we have seen now the cost of living crisis. And when we first started delivering advice, there were around 3 million people in problem debt. We now know that's 8 million people, 15% of the UK population. And so for me, I think there are some key things that are opportunities in this financial inclusion strategy, but I also think there are things that we can't afford to get wrong, considering what we've just seen over the summer, the impact that that has had on people's ability to actually look at their neighbours and see them as human. We're starting to see that in London. We're starting to see that across different parts of the country. And I think one of the key things for us is actually that level of destitution that we're seeing as debt advice organisations. I've got quite a few of my colleagues in the room. We are seeing people who effectively can't afford to eat, can't afford to feed their children, clothe their children. We're hearing teachers having children turn up in school with dirty clothes because the parents can't afford a washing machine. So I think we're in a real crisis moment, but actually some of the biggest people working on the front line are the debt advice organisations providing that support. We issue food bank vouchers, we issue fuel vouchers, we also issue white goods. So just this month, my team have issued 2 washing machines, an air fryer, because a client couldn't afford to turn on their oven, and electric mattresses to allow people to get ready for winter. So these are the types of things that I think are very important. And for me, I think if we're thinking about growth, it's that inclusive growth perspective. And if we don't have inclusive growth, we will start to see more of the fabric of our society start to kind of come apart. But also, I think we have to be bold enough to think about actually who are the people that are most affected by financial difficulties and inequalities, and be clear that we can call it out. So we know it's those that are most marginalised in our communities. So Kate mentioned disabled people, women, but the bulk of them are minority ethnic communities who are usually and primarily in work that is less stable, pays less, and we know that there's an ethnicity gap that impacts their abilities to build wealth. And I think we have to be honest enough to be able to say, as a Labour government, as practitioners, we recognise that until we pull up those that are at the bottom in our society financially, we are not going to get growth in our communities. And the potential lost is immense. So we know that actually people who are worried about money cannot move from their situation. What tends to happen is people are stuck. They are unable to think beyond a survival mode, let alone get to the point where they're thinking of savings or credit or investing. That's a very long road for some of the clients that we're working with. So what I would say is we need to think about debt advice and the frontline services that provide those clients with a lifeline as the foundation for financial inclusion and as the foundation for any growth aspirations. Because if we're thinking about ensuring that people are able to build wealth, they need to be able to ensure that they're not actually borrowing from Peter to pay Paul. And I think the other key thing that I would also emphasize is that if we're thinking about how we get people to the point where they're thinking about their financial aspirations, one of the key areas to think about is financial education, but actually financial education that's relevant to people's needs. So if we're thinking about adults, we should think about where they are having life changes. We should think about where there is actual need in terms of, for example, we have clients who are just about to have a child. They worry that their income is going to be halved. That's the point where you need some guidance and some support for those individuals. So embedding them into those life moments and those teachable moments when people are ready to listen, I think are the key things. And I think I'll leave it there, Joe, before I continue. Thank you.
Thank you very much. I love that point about sort of family and financial education at that moment of family change is really interesting. So, Lucy, you've been waiting very patiently. I've seen you scribbling down notes and ideas.
I have.
We have a financial inclusion strategy in the cooker. It'd be great to get your thoughts.
Yeah, I'm really glad, Joe, that we're having this discussion, and thanks to Rachel for the presentation. It was really, really good. You did great slides. Luke, I won't tell the other Rachel about the money box that your son is stashing money away in. Joking apart, look, let's take a step back, as Joe did right at the start, and think about what financial inclusion really means. It is about, for me, it is as fundamental as the right of every single person in our society to have access to and be able to participate in that society. It is as fundamental as that. Joe talked about, you talked about women being preyed on at the school gates and loan sharks. Luke, you talked about bailiffs, just horrific stories of what individuals are going through. I've met something that really stood out for me, and this is going to be part of the, as Kate knows, the financial inclusion strategy. I've met victims of economic abuse who are, I'm looking at Sam down there, who have been women who have been effectively impoverished by abusive partners who've become the sole payer of joint mortgages, and they're unable to sell their homes. And we know that economic abuse is so often perpetrated alongside other types of other forms of abuse as well. I've been to refuges in my constituency, and I've met women whose partners were physically abusive but also controlled their access to money, and that was a really, really important part of the abuse that was being perpetrated. I've met ex-offenders as well in my constituency who come out of prison with a best intentions to really reform. They want to, they want to get a job. They can't get a bank account. And as you know, if you can't get a bank account, you can't get a phone. It's entirely cyclical, which adds, of course, to the cycle of offending, unfortunately. All of this financial exclusion really holds people back. You can't, of course, manage your work or your family, do everything in life that you want to do if you're constantly worried, as other panellists have well articulated, about financial difficulties and problems. So that really is the most important point. Financial inclusion means societal inclusion. And as Luke put it very well, this is core to who we are as a Labour Party. There's no doubt whatsoever, as has been well covered already, that increasing levels of financial inclusion is a societal good, but it's also an economic good as well. And you saw that come through strongly in Rachel's slides. I won't go through all the ways in which financial inclusion, we've done that already. I won't dwell on that. But I think, in short, you can well summarise it by saying that it's hard to think of an area of government policy which wouldn't benefit from greater financial inclusion, criminal justice. We could go through them all. I want to reassure you that, and Kate knows this, our ambition as a government when it comes to financial inclusion is really, really clear. We know that the barriers are varied and that they are complex. Access to affordable credit being a key one amongst them, access also to affordable mortgage products, particularly for first-time buyers. The lack of digital skills is something that we spent quite a bit of time talking about in an increasingly digitized world. There are issues with product design in that increasingly digitized world, making sure that those products are properly accessible to everyone that we need them to be accessible to. We talked about financial education as well, incredibly important. So Luke's already covered what is going on in the enforcement sector. Oh, I should mention, actually, Muna, I thought your points around financial education at particular points in life are really, really strong, and I will make sure that they are covered off in the strategy. Just to build on, though, what Luke's saying about the enforcement sector, so we're regulating, and I'm sure you know, the buy now, pay later. Luke mentioned Help to Save, really, really important. We've seen real success, and that's why we've extended that programme. It's 50p for every £1 that is saved, and the government has already paid out £220 million in bonuses to people on the lowest incomes who are able and encouraged to save via Help to Save. It's been a really, really successful programme, and that's why we're continuing it. Banking hubs is something that some people in this room, we were talking about the people from Link over there, talking about earlier today. Obviously, people's ability to use cash and to bank in person, still really, really important, and that's why we've got the manifesto commitment that we do on banking hubs to have 350. As you know, we have the Financial Inclusion Committee, of which Kate is part, and we're putting together our strategy. You'll forgive me for not entirely preempting our strategy today. Safe to say that our ambition on this is really, really clear, and I'm really looking forward to engaging with some of you in this room, no doubt, as and when we bring that strategy out. So thank you very much.
Thank you very much, Lucy.
You don't have to clap.
It's excellent. And I think it would be good for us to just dwell on this point of savings, because it's come up a bit, but there are millions of people without any savings at all in the bank account, and that's a huge problem, not just for their finances, but for their well-being, their participation in work. What can we do specifically on savings? Obviously, Help to Save is quite a targeted scheme, but beyond that, I don't know if anyone would like to kick us off on thoughts on savings. Okay?
Sorry. I think the example that I'm most excited about is the work that Nest Insights did on the opt-out savings pilot. So that was an incredibly successful pilot run with two large employers, Suez and the Co-op Group. And what that really showed is the immense difference that you get in people's savings habits if you move from an opt-in model to an opt-out one. So when an employee is offered the chance to save under an opt-in scheme, there's a roughly 10% uptake. When you switch that to being something that is offered on an opt-out basis, you get 50% of employees saving. And this wasn't a scheme that encouraged people to, max out the equivalent of their ISA allowance. Absolutely not. These are employees on low incomes who are putting really small amounts aside and who regularly saved up the £300 and then used it, and then saved up another £400 and then used it. But it's that fluidity of the savings habit that those schemes really enabled. And I think the UK's tremendous success with opt-out pension enrolment, that auto-enrolment step, which made a massive difference in terms of how many people in the population had some pension provision. We know it didn't cover absolutely everyone. There are still problems with the self-employed, for example. But that pivot from an opt-in to an opt-out one is a really important thing. I feel like I'm spending too much time at conference helping the lawyers, but I do know that both of the employers who trialled those schemes really wrestled with the current regulatory environment and whether it was going to be okay to offer an opt-out scheme. So I think some changes to regulation to give that clarity to employers that they can offer an opt-out scheme would make a huge difference to enabling more people to build up the savings buffer that's needed. I think this is potentially the North Star on financial inclusion. If we can get many, many, many more people with a small pot of savings, the statistics that Luke mentioned earlier about a 60 to 70% less likely problem debt situation arising, that's a phenomenal change for many, many people. So let's go after opt-out savings.
Muna.
I wouldn't disagree with that, and I think we've seen a massive increase in the uptake for pensions with the opt-out, so the savings is also part of that. I think there's something that's sometimes overlooked, which is the saving habits and financial behaviours outside of the mainstream financial services sector. So, for example, most ethnic minority communities use something called a rotating savings club, ROSCAs. And a lot of those are outside of any banking structure. We know that some organisations and some fintechs are now trying to digitise that process, and so they need to be supported. We also know that lots of our mainstream banks flagged up the activity that's happening around those savings clubs as anti-money laundering issues. So I think to Lucy's point around ensuring that we should have financial products and services that are designed with the end user in mind, with that lived experience co-production. So the organisations understand their customers properly, and if they understood that there were rotating savings clubs and associations, they wouldn't be flagging and seizing that money. They would actually be encouraging it, and it could actually end up being used within this country as opposed to people shipping it out because they're afraid that it's going to be seized.
Feels like an absolute no-brainer, Lucy, one for the on the opt-outs there. Any reaction to that?
Okay. Sorry. I mean, it's something that I know we're looking at as part of the strategy. I think there's definitely a point around clarity of advice. I also think, for what it's worth, we're discussing savings, and obviously people, at this point, low incomes, being able to put money away, which is very good for financial resilience. That's why it's so important. But there is also a point around advice when it comes to people's ability to invest. As a part of our wider financial services strategy, we want to make sure that there is a greater awareness of the ways that you can invest even small amounts of money. Because at the moment, the way that the advice, I think only 9% of people, the FCA say, actually get financial advice, which means it's a really, really rarefied thing. And actually, if you were to effectively democratise some of that advice, as there are some really excellent companies in this area doing, more people would be able to make more of their money.
One of the things that we're really concerned about at the CSJ and have been for some time is this issue of illegal money lending. And it's kind of like the sharpest edge of the financial exclusion issue. And one of the things that really came through in the research was that actually it's not your kind of stereotypical like bloke with a baseball bat on the estate sort of stereotype that came through. It's people posing often as friends, becoming quite emotionally coercive. And I'm interested to know the panel's reflections on how we can sort of go about changing that understanding of what the face of illegal money lending looks like in the UK in 2025, and also what we can do about it.
Shall I go next? Because I think, as part of our manifesto coming when we said we're going to double the size of the mutual sector, I think all power to the credit unions, and I think perhaps the FCA could give some consideration to the proportionality of regulation to credit unions to help unlock some of that sector. And the other point I was going to make was the advice guidance boundary review the FCA is doing is so important, because I see what we've got, this, what I call the TikTokification of financial advice. And I've had constituents come to me saying we've lost money on crypto from this guy in the pub that was trying to sell us it. It was probably a slightly different face to you think. So we've got to get AI financial advice fitting with the regulatory environment as well. And just a final thing, just to incentivise the future of saving as well, is what might be called the gamification or the gamification of savings. And there was an interesting piece in the Times about Duolingo. Did anyone see that? Because who's a user of Duolingo? Yeah, quite a lot of hands, right? Apparently the owl has been quite abusive to people, so maybe it's not the best example, but Duolingo's created that gamification and nudge theory to get people using the app, and how can we productise and use innovative ways to shift new demographics into saving? So that's just a couple of questions.
Thanks, Joe. I was just going to come in on the illegal money lending point. So Fair for All Finance has now done its third batch of research on illegal money lending. The first time we did it, we didn't believe the numbers. We didn't think it could at all be possible that so many million people were borrowing illegally, so we did it again. And now we've done it a third time. And the numbers are not changing, so it is a really important thing to focus on. Your question was about how do we change those norms. In some communities, when we did that research, people not only didn't recognise that they were borrowing from an illegal lender, they said, that's just Joe. Sorry, Joe. He's the money guy, and he's been helping our family for 2 generations. He's like the local guy. He's the guy we go to. We've always gone to him. They don't perceive that there are any other financial services providers whom they could possibly approach because they feel so excluded by financial services. So I think it's important to recognise how far people feel from other alternatives to start with. My second point, and I don't wish to be really scandalous in a panel like this, but
Please do.
we actually need the high-cost credit sector, because credit unions and not-for-profit lenders can't serve everyone. There are some people whose credit risk just isn't appealing to lenders. And when we did a really big clampdown, and by the way, the FCA should be congratulated for this, we did a really big clampdown on the high-cost credit sector, we went a bit too far. And now for some people who really, when they do go to a normal mainstream lender, cannot be served, there isn't a high-cost regulated alternative. And those people are doing a couple of things that are simply not working. One is using buy now, pay later when it's not appropriate for their specific need, and that's why we hear from the debt advice sector that some people have 80, that is 80, simultaneous buy now, pay later lines. I don't know how they juggle that. The simple truth is they're not. The second is using an illegal lender. And the stories that we got from those illegal lenders, this is a little bit of a punt for novel research. We hired a research firm founded by a former illegal lender who'd done jail time. You get great access to illegal lenders if you have an illegal lender doing the research. Those lenders said things like, I try not to use actual violence because the threat of violence is more effective. And to Joe's point, I just send a picture of the kids being picked up from school and then I get paid the next day. I mentioned how bad the statistics are. It's 4% of our population who are borrowing from these people. We need to act on this. We need to give people the confidence that there are alternatives and that it is worth going to a credit union, that it is worth talking, here's scandal number 3, to their bank. Most people who are in financially vulnerable circumstances have a mainstream bank account. What's the role of the UK banking sector to also be able to provide small sums of credit when it's needed? We need to be able to change these norms so that everyone's expectations are different.
Lucy?
Look, I think, first of all, on Duolingo, isn't it, doesn't Geo have like a passive-aggressive...
Yes, what I mean, yeah.
Yeah.
Apparently it's bullying, verging on bullying.
No, but he has a passive-aggressive colleague. Is it, who does Geo in here that's like, isn't she called like Lena or something? She's like a... Okay, right. We digress. We go quite substantially, we digress. Look, it's about... Yeah, I totally agree, Kate. It's about having confidence in alternatives, and Luke makes a very good point around credit unions, and that's why I'm really pleased we're looking at the common bond, looking to revise that to see if we can expand the scope of the areas that credit unions are able to cover, because we recognise that they are a societal positive, and it's really important that people have that alternative. There's also an education piece there, as Kate was alluding to, and the importance of sort of FCA authorisation in this space. But to Luke's point around the TikTokification, I think that's absolutely key, and we need to make sure that fraud detection and protection in this area is able to sufficiently cover the digitisation of the advice space. At the moment, I'm not convinced that, well, there is frankly an awful lot of fraud that takes place in, I think it's £1 billion worth every year in this area. So it's something we clearly need to pay a lot of attention to.
We're going to come to our audience questions now. So if you could raise your hand, please make sure it's a question with a question mark at the end of it. And we might do two, we'll do two at a time, if that's okay.
Hello, my name is Martin Kobach. I'm a Professor of Financial Inclusion at CASM at Birmingham University. My question is around insurance, because it hasn't really been touched on today. And we're in a system now where insurers definitely chase the healthy and the wealthy, the best risk, but we still don't have the conversations around what and the vehicle for looking at the winners and losers. And especially around car insurance, somebody mentioned it was the biggest poverty premium in the UK today. Fair by Design has done some great work on that. I was just wondering what the panel thought about tackling the biggest poverty premium in the UK today, car insurance. I think the worry of the sector is this will get ping-ponged between the Transport Motor Insurance Task Force and the Financial Inclusion Committee. I just wondered any thoughts on that.
Okay, we'll have one more question. Grace, you've got the power.
Hi, thanks so much. I'm Hannah from Good Things Foundation. My question's on digital inclusion. We know that a lot of financial products and services are going online. Lucy, it was great to hear you talk about digital skills. I'm curious what else in the frame of digital inclusion is going to be addressed when it comes to financial inclusion, and what the government are going to do to link up these two respective issues.
Thank you. Insurance, digital inclusion. Luke, do you want to kick us off?
I was going to... Who's heard of the term ghost broking? Right, because this is key to understanding the car insurance problem that we've got for disadvantaged groups in society. Ghost broking is where people are actually buying a fraudulent car insurance policy. Okay, and I'm doing a bit of work with the ABI on this, because that is the real end of the normal distribution that I think we should worry about when it comes to car insurance. So people think they're buying car insurance, it's invalid, they have a crash, and of course it's precisely that demographic, right, that can't afford the car insurance that's so high that they revert to the dodgy bloke in the pub that's selling them, or in the Facebook market group place about a kind of ghost broker policy. So just to raise awareness of that, and if you're interested, just get in touch. And lots of questions I'll keep passing on.
Joe, I'll just go quickly, because unfortunately I'm going to have to run. I'm really glad you mentioned the task force, because you'll know that was in our manifesto. The task force is going to conclude relatively soon, so we'll be bringing forward proposals. I'm really conscious of the need to come forward with something meaningful on that. I think that's what the politics of the issue and frankly the consumer need demands. I think the main driver of the cost of premiums is the cost of claims, and so I think it's really important that what we come forward with addresses that. Hannah, it was about digital skills, wasn't it? Yeah, I think, look, part of this is about the product design point that I talked about previously. Clearly we need to have education from a really young age on digital digital skills. But I am very conscious, and we've been talking about this as part of the committee, that there is, no matter how much sort of education there is on digital skills, there are still going to be people who are excluded from the use of certain things just because of the design of certain products. So there is a lot of positivity in the industry, as I'm sure you know, around ensuring that that design is as inclusive as possible. And our job is to try and make sure that that goes to as many products as we possibly can get it to. And I'm sorry to have to head.
Thank you very much, Lucy, Economic Secretary to the Treasury.
Thank you.
Thank you. Okay, we've got time for a few more questions. So hands up if you would like to ask a question. We've got two at the front here.
Thank you very much. My name is Kiri Adams. I'm from Christians Against Poverty. And Lucy mentioned it briefly, but we've also heard that Labour have committed to 350 banking hubs, but also in their NHS 10-year plan, they mentioned debt advice being part of the kind of neighbourhood health centres. And so I wanted to know from the panel, what do you think would be the one thing that those things in our neighbourhoods on the ground could do to help improve financial inclusion?
Okay, excellent. We'll have one more question. Thanks.
Thank you very much. Riccardo Tordera from the Payments Association. Fraud is still one of the main problems, and we haven't managed to doubling down on it, despite the last rules of the payment system regulators last year on reimbursement. And it is because it's not just reimbursement that prevents fraud from happening. What are we really doing to prevent fraud at source? You were talking about some very good points before, but are we ready to understand that it's not just reimbursement that makes the fraud not happening?
Let's start. Okay. Muna?
Yeah, happy to take the... So we welcome the plan to have debt advice as part of the NHS 10-year plan. We know the link between people's mental and physical well-being and financial difficulties. I think the one thing that I would say is ensuring that actually it's led by local people, what the design of that service looks like, and actually it's embedded within the existing fabric of what's being delivered locally. There are lots of great organisations who are already working in the health and wealth space, but also, like Rooted Finance, we develop an ecosystem of organisations that are all coming together to support local people through different areas of law, different areas of support. So how you ensure that you embed that within that existing landscape rather than reinventing the wheel, I think is really important. I think the point around, I'll just come back to the digital, if possible, very quickly. I think there are some assumptions that are made that some people are digitally excluded when they're not. So I think we need to really look at those. But also, I think where those people do have digital skills, actually it's a trust issue. They don't trust institutions with their data. They don't trust... we've got this whole debate happening around digital ID, obviously, and that kind of shows where people's level of trust is. And I think it's that education piece. So I think if people realise, actually, if you are able to use it in this way, then you are more likely to access X, Y, and Z, and then it impacts on your life in these areas. And so one of the approaches that we take is actually we're actually embedding open banking into our debt advice process. And we're working with our lived experience steering committee to be able to understand what are those trust issues and then how do we communicate that. So really working with your communities to understand what the issues are.
Kate.
Thanks. I was just going to briefly comment on the part of the question about banking hubs and the impact that they may have. When we look at the research that we have, 82% of people in financially vulnerable circumstances are still using cash in some way. 10% of them are only using cash. They don't want to do anything else. So I do think that access to cash piece is really important. You've got John from Link in the room who can tell you much more about it than I can. But what we also consistently hear from people is that they do really want that rounded banking service experience, which goes beyond cash. And I think, comes to the heart of how you join up all financial services to enact what someone needs in their life at that moment in time.
Luke?
Yeah, just thank you for the great question on money and mental health. I think there's an inextricable link here, and I met a constituent who'd unexpectedly lost a family member and then, because of probate, had to deplete all their savings and get into debt to pay for the funeral. So, you know, a financial crisis often can precipitate a mental health crisis and vice versa. They're inextricably linked. That's got to play a crucial role there. And the MMHPI do some fantastic work, as folks will know. To Ricardo's point around fraud, I think this is also key. Look, the reimbursement rules are in place. So if you're a victim of fraud, if you do the right things and you go through a mainstream bank, you can get reimbursed. But here's the critical thing. Consumers reduce faith in spending in the financial system as a whole once they've been a victim of fraud. So it retreats them, it can exclude them. So even some of the research from Visa shows that if you're a victim of fraud, you're much less likely to even use a credit card. You might revert to cash after. So we've got to recognise that fraud can change consumer behaviour for the worse and can actually precipitate financial exclusion.
We've got time for some final questions. That hand went straight up, but then maybe there's two more we can take.
I've got to go there.
Thank you. Susan Wallace, I'm a freelance journalist. When we're talking about people who have a low income, many, as we're all perfectly well aware, are getting some kind of government benefit that keeps the show on the road to some extent, if they're not going to food banks and uniform charities and all the rest of it. At least it might keep a roof over the head and keep something ticking over. So fairness in finance, it's a tricky thing because do you think that they are too crushed to actually take the risk of elevating themselves up out of the benefit system because they think they might not find the way back and everything will just fall apart?
Great, thank you. We'll have this lady here.
Thank you. Hi, I'm Sam Rex-Edwards from the Finance Innovation Lab. So if the government wants to make actual, real, fundamental difference on exclusion from credit in particular, it's going to have to make sure that the market functions properly. It's really going to have to fix that market failure. So for Luke, would you agree that the financial inclusion strategy should give serious consideration to introducing interventions on access to affordable credit? For the panel, what interventions would you propose? And to everyone, especially the City Minister and Luke, we'd like to invite you to visit the Fair by Design stand to hear directly from people with lived experience of exclusion from credit.
Okay, we'll do one final question. Lady at the back.
Hello, Helen Nundy from the Money and Mental Health Policy Institute. Thank you, Luke, for saying nice things about our work. I just wanted to follow up really on that question, which was to ask, I guess, Luke in particular, if he would consider having a word with Wes over there to ask whether there's something we could do to embed conversations about money into our mental health pathways. Because you're asked about employment, you're asked about domestic abuse, but you don't get asked about your finances. And if we did ask people, our research has shown that we could increase recovery rates for depression and anxiety by around 50% by signposting to debt advice earlier in those journeys. So having them co-located in neighbourhood health centres is amazing, but only if we are asking people the right questions and helping them get access to those services. Thanks.
So we've got benefits, we've got access to affordable credit, and we've got money and mental health. Luke, do you want to kick off?
I've got to go. I think I'll wrap it up by saying, when I was in the cabinet in Newham Council for a while, and we had a massive partnership with the London Community Credit Union. So those partnerships, when you've got people, you know, closely geographically proximate to, you know, job centres and local authority services, I think that co-location is really important. Yes, I'll speak to Wes. I agree about mental health pathways. Yes, I'd love to come and visit. And I think the other point I was going to make is the FCA, from treating customers fairly to new consumer duty, we need, I think, a future-proof. We need the regulatory philosophy needs to match the ambition, I think, of what is forthcoming with the financial inclusion strategy, without being too detailed.
Moona, final word from you.
I think having those money conversations as early as possible is important, not just from a health perspective, but actually from every perspective. So we know school leavers, care leavers, embedding financial diagnostics and a kind of financial health check as part of that process, I think is really important. I would also encourage people to think about how you can take advice out into the communities. So how do we destigmatize debt advice? How do we destigmatize people accessing support and help? And very similar to mental health, the same way people don't like to talk about their mental health, they don't like to talk about their financial difficulties. So ensuring that there is an education campaign around that, and ensuring that people should feel free to talk about their finances before it gets to a mental health crisis.
We are on the hour and I'm being glared at, so I have to say a huge thank you to our panel, huge thank you to our fantastic audience and questions, and see you at another CSJ event. Thank you.
You'll have to come and visit us then if you know the area.
I lived in Stratford.
Okay, awesome. I'll reach out to you.
Thank you so much. We appreciate it. We'll be in touch as well.